Okay. I think we're live. We will we will see how this goes. I'm just experimenting to see if I can get away with doing a live stream as well as doing my daily video. I think it'd be fun to do this once a week or something, kind of make it a little bit more interactive. But so yeah, if anyone is here or whatever, you can say something in chat. Make sure that I'm actually live. I think I am. So here we go. All right. So just wanted to talk a little bit about what's going on out there in the markets. Yesterday we had our swing low, and it was higher than our prior. So this kind of selling climax so far has created a bit of a bounce, and this is what we were expecting. Today is a red day, so today, may not be the funnest day to go live, but it is what it is. We're in the middle of this. I think the end of this bear market, and those who have a lot of determination and a lot of faith in this are still here, and I'm included in that. So, but yeah, this is where I think we are definitely oscillating near the bottom of this range, and we're going to kind of see where we go from here. As I mentioned before, it is our weekly that if we get a doji, this actually would not be a bad thing. So I'm not afraid to stick around the low 16,000s for about a week. We got 4 days and 5 hours left on this market here. So doing pretty good. Seeing some people in chat. Thanks for showing up there, you guys. Acor and David and Edwin, nice. Okay, so anyway, we are, from a, you all know that I trade for a living, and the question sometimes comes up, like, what do you do when markets just continue to bleed off? Like, what do you do for the entire year and a half that we've been going down? And this is the hardest part of trading. It is waiting. The hardest part of trading, kind of the work involved in trading, is being patient and letting the bottom actually form. And I personally thought that we had let the bottom form. This selling climax right here was exactly what I thought. I thought we had for sure hit the bottom here, but this FTX Black Swan knocked it out. But what that does is that gives all of us OGs even that much more confidence that this is like we're having a selling climax after the official selling climax, and things are most likely going to start leveling off. So this is the information I kind of wanted to talk to you guys about. I kind of wanted to step back a bit and really analyze this bear market, and I kind of wanted to do it in a way that we could really think about the time, because Bitcoin's 4-year cycle is alive and well, and we are absolutely in the middle of back when we were doing this, when the prices were fluctuating, and then we sort of had a drop, and then we rebounded, and Bitcoin acted different than it ever had. There was a lot of speculation that maybe the 4-year cycle was done, and that we were in this new paradigm of Bitcoin's going to act differently now, and it'll just kind of follow along with markets, and it'll just behave differently. Well, because of the timing that we have this year-long bear market, just like we always do after a climax, the 4-year cycle is alive and well. So let me explain my chart a little bit before we get too far along. These red arrows are halvings. These are the halving events. So you can see how the halving event was kind of the thing that started off the first bull run. The halving event, there was a dip after the halving event, and then we took off and we had our bull run. And then most recently, back in May of 2020, after the COVID spike down, we leveled off and we had our bull run. So this halving event is the marker of the 4-year cycle, and the reason it has in the past had such a huge impact on price is that we are. It just has to do with the disbursements of Bitcoin. So miners are mining Bitcoin, and originally there were 50 Bitcoin released to the world, and then after the halving event, it went down to 25 and 25 every 10 minutes for about 4 years, and then 12 and a half and 6 and a quarter, and we're right in that 6 and a quarter place. But what's happened is that the miners were the ones to receive the Bitcoin first, and then they were the ones to sell it to the market. And miners have a lot of incentive to keep their operations going, so they have incentive to spend as much as they can on new miners and new equipment, and they have bills, they have to pay electricity and things. And so prior to the halving event, they would sell or spend about 80% or 90% of everything they mined. And then at the halving event, they literally had less Bitcoin to sell. And that created this economic shock to the system. And it took a while because look, the past few, you can see how even for about a month and a half after this happened, there was kind of a dip or kind of a flattening. And it's because miners were adjusting to that. They were selling less, but they still had money to spend, and they had to kind of regroup. And when that selling pressure drops in half, because it has to, that's where these runs in the bull market have come from. So it kind of came down to miners having so much power. Well, once the miners have less control or less incentive to sell, and you kind of take that out of the system, then it really should adjust. Like there shouldn't be a 4-year cycle because the 4-year cycle was born from this mining. Well, the fact that we're still in this 4-year cycle can tell us a lot about timing. So from the bottom of the first bear market to the top, I'm on the weekly chart, so you can see that there were 110 bars, or about 770 days. So the first bull market cycle was very fast. It only took a very short period of time. From this top to this bottom, it was 59 bars, 413 days. So if you kind of keep those points in mind, we went from the bottom to the peak, and this one took us 1,064 days, 152 bars. So this is certainly longer than our 110 from our first one, but you could see that the market was more mature and there was a lot more going on here. But 152 weeks to go from the very, very, very bottom all the way up to the peak. And then we had this fall, and it was 52 weeks long, about 364 days, from the very top to our absolute bottom in 2018. And then things are getting interesting, because now if you go from the very bottom to the top of the first peak, that is 122 weeks, or 854, which is pretty much the average of these other two. So let me just put that up here. So we had 110 and we had 152, and divide that in half, 130. It was a little less than half, but it was pretty much the average of the two, which seemed to make sense. And a lot of the indicators, when we went the weekly So this move here, there's just a ton of indicators that everything had topped out. We had maxed out everything. You can see how our RSI was way up here during this time, and it was way up here back when we had really spiked hard, and we never went back that high. So that means that the second peak was much less obvious. So if you take a look at this and pretend like it was the peak, there's kind of some time pain that we had to go through. So these are the lengths of time that we had to go from our first kind of fake out bottom to our actual most recent bottom. And whether this will be the actual is still up for debate. We still have more information we need. But what has made this cycle unique is we have had a top and it became sort of a fake out top, and this became our top. And then we had a bottom, and this became sort of a fake out bottom. So we're having a double peak, a peak and a second peak, and then we're having a bottom, and now we're having a double bottom. So the question is this where we lie? The very unusual thing about this is that these markets are very well calculated, and this might be just an unbelievable coincidence, but if you take the very bottom to the actual high, which was at the top of this, it was the second peak. Look at the number of weeks, 152. It's the exact same number of weeks that it took us to go from our real bottom in 2015 to our real top in 2017. So these are matching absolutely precisely. Well, that's pretty unusual. I mean, the odds of that happening are pretty strange. And it kind of tells you a lot about trading. There are a lot of big players in here, and they have a roadmap of what the price should be, and they take into consideration what their abilities are. I've actually read some things that Alameda and the FTX debacle, those guys that were market making, they actually created this second move here. So this was very precise. It was, whether that's true or not, the precision that this became the top is absolutely unbelievable. And it certainly was a different top than we've ever seen before. And you can also tell that there are now larger whales in this space that know how to move markets and dictate price. So that can be unsettling, but it can also be settling because you also know that these bottoms will be fairly manufactured, and the people that have a lot of money to gain, they're not going to let this just die off to zero. They're going to try to trick retail as much as possible to scare us out of positions, but there will be an end to the bleeding at some point. And so from a timing standpoint, the tops are very, very interesting. And then now let's look at the bottoms. So the bottoms, before it took us 52 weeks and it took us 59 weeks. So we're thinking around 55 weeks from top to bottom. Well, the absolute top to our most recent bottom is 52 weeks. So that matches our last one exactly. So if we're gonna match our very, very bottom to our very top perfectly, this 152 weeks, from our bottom to our top, and do 152 weeks, and these match perfectly, I would not be surprised if our top to bottom of 52 weeks matches perfectly to our most recent week that we just barely closed. 52 weeks. So these match absolutely perfectly, which is very interesting. And when I'm kind of analyzing market psychology of what happens emotionally when you have a drop like this, what happens is there's a lot of fear that will keep going down, but usually it doesn't materialize. The negative that's happening on this bar is that we closed so close to our low for the week. So that's not great. We don't have a lot of tail. A lot of these tails kind of help dictate that bottom, so you can kind of mess around for a while and you still don't revisit that low. Well, here we closed fairly close to the low, so this becomes a little bit of a question mark. But if any of this is manufactured at all, it's likely that we're either there or we're very close. I just think that emotionally and time-wise and manipulation-wise, everything is matching pretty well. The other thing to think about is that, you know, if we took this top to this bottom, it would have been the shortest by far, 31 weeks. And in fact, that would have been so unusual. It would have cut almost 20 weeks off of normal action. But I think this was acceptable because if you think about this top to this bottom, which this would have normally been the cycle top based on, you know, a number of other factors. This move here was 61 days, so we put in plenty of time to get there from the first top. And if we go from the first top to our most recent one, that's 82 weeks. So now we're getting through. We're actually showing an excessive amount of pain during this bear market. And so if you think about it from where we most likely would have if some of that market manipulation hadn't been there, and you go back to the rudimentary 4-year cycle caused by the halvings and miners, we would have normally ended here, and it would have represented 61 or 82 weeks worth of downside if you go from this bottom to this bottom. And the bears are just about spent, in my opinion. Obviously, you know, trading is a game of odds, and we do the best to gauge what we're looking for. Oh, my cursor's not moving. I'm sorry. Is it okay? Well, interesting. Yeah, you're right. You can't see my cursor. All right, I'll have to figure that out. This is a good practice, you guys. I appreciate it. I've got to stop saying here for the rest of this. Yeah. Well, anyway, from a time standpoint and from a pain standpoint and a bear market duration standpoint, this has been probably the most intense of all of the bear markets. And the amount of money that's been on the table. So what I'm trying to teach people is to trade in such a way that you have a backup plan, that you keep money on the side so that you can adjust if you didn't guess the bottom perfectly, but that we're in a position where our rewards are greater than our risks. So that kind of summarizes what I kind of wanted to talk to everyone about, just kind of showing this. When we look at the daily, I have not even been able to find a scenario that even closely matches the most recent price action that we have. So I know you guys are aware of my my AI that I've created, and today's not closed, so I think we're at 16,530 right now. And so if I update this, yeah, so that is updated. My variance is 20% over 9 data points. And this is really hard to really believe until we get to about 15 or below. And so, you know, obviously, if this is our closest match, like the shape of this chart does not look like the shape of this chart. And so there's not a lot that you can place on this. And so I'm still waiting for more information to kind of get there. All right, so let me just kind of catch up on chat really quick. Okay. Well, hopefully you can still see me. Maybe my connection's not very good. Maybe that's part of it. But Edwin asked Calvin, Do you think we'll see another dip when bankruptcy funds are released? This would happen post Voyager, Celsius, and FTX. That's a really good question. It kind of depends on who those holders are, and it also depends on timing. So if we're at the bottom of the bear market and we are kind of wrapping up our kind of our worst case scenario that's going on, then by the time they get their funds, because these things take a long time. In fact, it's been 10 years since MTGOX went down, and I still haven't seen a penny from that. And I know that's not in our U.S. jurisdiction, but I haven't seen a penny from any of the bankruptcies that have happened over the years. And I feel like the people that are getting their money, they may, but I just don't think they'll be getting their money anytime soon to even affect anything in the current stage. So what's going to happen is we're likely to see a move in the market, and we'll be moving up to a stronger place, and then markets will kind of catch up. So if that was ever released and we're in a bull market, almost nobody will sell that unless they have a lot of self-control. Okay, I really do think my screen is frozen. So sadly, I'm gonna have to. I mean, maybe I can try. Yeah, I'm definitely not capturing my screen, or am I? All right, well, I guess maybe I'll have to wrap it up. So, yeah, we're just sitting here waiting patiently. Like I say, the hardest part of trading is waiting for the bottom, because every time I make a trade, I have to have a reason to buy. I'm not a dartboard thrower. If I have a valid reason to buy and I'm wrong, that's one thing. But if I'm lazy and undisciplined and just start throwing buy orders out there just because I feel like my instinct says, oh, we're at a good spot, there's no way to backtest that. There's no way to really analyze the decisions that you're making. And so while we're at the bottom of this bear market, I'm looking for some sign that there is a bottom established and that we have momentum to the upside. I had that back in end of October and beginning of November. Now that's kind of erased itself. And so I'm back to waiting and waiting for the right entry point. If you can have a reason to invest, suddenly you're doing some things right. You're gonna avoid a lot of problems. And so we're back to waiting for the bleeding to stop and wait for another exit of the red zone, wait for markets to stop being so emotional and for a base to form. Once those building blocks are in place, then suddenly our risk reward is better and the upside is better. So right now it's just a matter of watching liquidity. It's making sure that we haven't overinvested and making sure that we can find the next spot. But all of this takes time, and we'll gladly wait for it. But I think there's a case to be made that we may have just put in our cycle low. There's definitely a case to be made. If not, then we'll just have to ride it and see how it goes. And that's where keeping our exposure limited, it makes sense in this environment. Okay, I guess since everything's frozen, I will stop there and we will catch up. I'll publish this on Crypto Influencers and everywhere else too, and maybe I can figure out the bugs and we'll have a more successful run next time. But it's cool to have everyone here, and it's really cool to be able to get a little bit of interaction, get some questions in and that type of thing. So Good luck, everybody. I hope by next week things are looking a little bit better. All right, we'll see ya.